guess what? Not every house that sells on the market is in perfect condition. So, oh yeah, before I go on, DM me on Instagram if you want my free training. 25-minute free training, 23-minute, no strings attached. Launching a new one next week, so this is the very last time I will be giving away my current free training. DM me on Instagram if you want it. All right, so wholesaling, what you're doing is you're acting as an intermediary. You're acting as like kind of the help. So traditionally, someone says, hey, the real estate agent, I'd like to list this property, do all the paperwork for me, have an open house. Similar with wholesaling. Wholesaling, you find people that need to sell their distressed properties, whether it be bankruptcy, foreclosure, moving, divorce, whatever it is. People are going through crap and you're there to provide a solution to them. So what you do is you get the property under contract to purchase. You say, I'm going to buy the property from you for X amount. You get under contract and then you sell that contract for an upcharge. So let's say, for example, you got the house under contract to purchase for $150. In the first couple weeks, you bring in people, and there's a little more to it, but you bring in people and say, hey, how much would you pay for this house? They offer, it's distressed, they're rehabbers and landlords with money, and they say, I'll buy it for $175. So what you do is you assign the contract over, and then at the closing table, the seller gets paid their $150 that was promised on the contract. Anything over that, you get paid. I mean, I know people that make 50 grand a wholesale and 20 grand a wholesale and 40 grand a wholesale. So you can make a lot of money wholesaling real estate because you're connecting the dots. So that's wholesaling. There's no risk if you have contingencies in there, which we can talk about in the future. But just know wholesaling is a great way to invest if you have no money or no credit because you're not closing on the property. So why would you need money or credit? So wholesaling is the first way to invest in real estate without using any of your own money. The second way is to buy rentals. And that usually surprises people that are newer to this space, which I love giving new information to people, kind of opening their minds up. You don't have to put 20% down to buy rentals. You don't have to use any of your own money to buy rental properties, okay? You don't need any of your own money to buy rental properties. I own $40 million worth of real estate, and I have not used a dime of my own money to do it. So what we're gonna do is I'm gonna break this down a little bit further, and there's a lot that goes into it, and there's a ton that goes into buying rentals. It's pretty simple, but it has some nuance. Just know that I own $40 million worth of real estate, including apartments, single families, and storage facilities, all without using any of my own money. So you don't need your own money to buy rental properties. You just got to know how and have connections that you make. Almost every investor I know, including myself, didn't have the connections when they started. They made those connections, and you can too. There's some framework and process we can talk about there. And the third way to buy real estate, if you would like, without using any of your own money and invest, is fix and flip. This one's usually the simplest. It's kind of combining the two. You find a distressed property, you fix it up rather than rent it, you sell it, and whoever you borrowed money from, you pay them back plus interest, or you split the profits with them. I remember watching a Flip or Flop on HGTV several years ago, and I remember they would borrow money from like a rich dude, and he would split the profits with them. So you just don't have to use your own money, but you gotta give up some of the profit for borrowing the money. So those are the three ways to invest in real estate without using any of your own money. If you have not yet, double tap the screen, let me know where you're from, how many lives you've been on. I'm just getting the ball rolling. What I'm gonna do now is I'm gonna break each of those down in a little more detail, and then I'm gonna talk about how the market affects them in its current condition. So now those are the three ways. So let's talk about the current real estate market, and then we're gonna talk about how those three processes are affected by it. If you appreciate all this free information, make sure you're following me on TikTok, on YouTube, on Instagram, on Twitter, and Facebook now. So make sure you're following me. I have one account per social media, so if there's other ones that are scams, it's at Same Faster Freedom, no extra letters, no numbers. That's me. People are getting scammed every single week from people on Instagram. Instagram doesn't care apparently, but people are getting scammed every single week on Instagram from people pretending to be me and messaging people and getting them to send them crypto. That's not me. So anyways, so let's talk about the market. So make sure you're following me on all my social media. If you're surprised at all this free information I'm getting, I got a book coming out soon, podcast coming out soon. So get connected with me on your favorite social media and you'll have more opportunities to get more free information. So do that, and then DM me on Instagram if you want my free training. No strings attached. I'll send you the link directly on Instagram. Just DM me free training. I'll get it to you today probably. New one coming out next week, so this one's going away tomorrow. All right, so the market. The real estate market has been the hottest it's ever been, ever in the history of real estate since probably early 2020 to now. So this little what is that? 20, so there's like 25 months, 26 months, 27 months has been the hottest ever, and that is over. There were times where there was 30, 40, 50 contracts on houses. It's because the supply was low, the demand was big, and interest rates were low, and people had money from the government. So people had big money in their pockets, they wanted to move, and then supply was low and interest rates were low, so it blew up. The Fed is like, whoa, we can't do that anymore, so they're pumping the brakes on that by increasing interest rates, which inflation has already started to decline. The housing market's not really gonna crash, but it's gonna kind of soften because few people, the demand's gonna go down. The supply is still low, but the demand goes down when someone's not gonna pay 6% interest rate, even though historically that's still low. People are greedy. So the market is, in my opinion, gonna do this over the next 2 years, and let's run that filter through what those types of investing are. And again, I'm sorry, I'm not those gurus, I hate that word, that say the sky is falling. I know so many people on YouTube, you know them too, I'm not gonna say their names, that have been calling for a crash literally since 2015. I scrolled through somebody's YouTube the other day, and I shit you not, through their page, I scrolled for like a minute, so probably 200 videos, 300 videos. I literally saw like 20 different ones that say the market was crashing. Of course, eventually they're gonna be right, but that's a cheap way to get views. I will never do that. The market's not gonna crash. No way, there's no data to support that at all. All right, here we go. So unless there's a global pandemic, then it may crash. Oh wait, we had a global pandemic and it didn't crash. Will it crash if interest rates double? Oh wait, interest rates double and it's not crashing. So there's bigger forces at play, like hedge funds and like limited supply, that will keep it from crashing. So the next 2 years, this is my line of where the market's gonna do. It's here right now, 22. So I think we're gonna kind of a little more upside this year with limited supply. And then I think the next couple years is gonna be, kind of more like up, down, spring, summer, spring, summer. And then by 24, end of 24, I think we're gonna start to see potentially, some ups and downs kind of thing. So my projection, and I know I'm obviously not for sure right, but I do know whoever made those thumbnails, I'm probably more dialed in than them. I do this all day, every day. Bought $20 million worth of real estate in the past 12 months. During this time, I bought $20 million worth of real estate at really big discounts. So I'm pretty into the market, and I have connections around the country. So this isn't for sure gonna be exactly this, but this is more likely than that, I promise. So I love this. This is huge, because what happens in this time frame is people buy real estate and they're not gonna make off like bandits even though they screwed up. During this time, people would buy a property, right here, and then they would take twice as long on the rehab. They wouldn't even rehab it that well. They would, list it too high, but they would still make money because the market carried them. It was a bunch of tailwinds, right? You wanna pee away from the wind, not into the wind. So, if you're a guy, I guess. But anyways, so the market has, helped them. Now with this, if somebody buys a house here and sells it here, it's worth the same or a little less. So they have to be efficient and effective in their rehab and their purchase. They have to know their numbers. A ton of people have invested recently that don't know their numbers, but they still made money because the market carried them. So this is amazing. For me, my students are super, super pumped about this. We've been talking about it. They're gonna make a lot of money these next 2 years with a flat market. You can make money in a market like this, or like this. You just gotta know what you're doing. But a market that's flat is gonna get rid of a lot of the competition, so the deals will become easier to come by. All right, so now how does my potential projections, probably right, maybe not, affect wholesaling? Any guesses? How is wholesaling going to be affected by a not crazy strong market? Well, if you're a wholesaler, then you're going to have to really have some good buyers, not those people that were paying way more, pulling out a HELOC because they had a good job and didn't know what they were doing and did this on the side. So if you're a wholesaler, just make sure you have a good buyers list. And there's plenty of good buyers out there. I don't really like selling to hedge funds, but they're still probably going to buy. They go in and out, they'll buy. Your good investors, your people that own franchises of We Build Ugly houses, and your flipping companies in your area, and your bigger investors that have multiple properties, they're still going to be buying. So if you're a wholesaler, make sure you have a good buyers list in this market shift. And just, you're not going to make these huge spreads anymore. You're not going to, realistically, a 10 grand wholesale is not going to be a 30 grand wholesale. So you just have to be a little more realistic in your expectations, and you have to have a little bit better of a buyer's list. So that's how wholesaling is going to be affected. If you do it the right way with contingencies, you're not going to lose money, because that's the whole thing. There's contingencies, and there's no risk. So let's quickly walk through a wholesale deal to explain that, and then we'll move on to rentals. Again, DM me on Instagram if you want my free training. If you're on YouTube, it should be in the description below, but if not, you can DM me on Instagram. It's going away tomorrow. It was supposed to go away today, but I had so many people ask for it, and then the story went away on Instagram that it's going away tomorrow. All right, here we go. So wholesaling real estate is like any other type of real estate investing. You take a distressed property, and then you fix it up. You make it nice, and then you sell it or rent it for money. So that's what real estate investing is. When you're wholesaling, you're living in the transaction. So this distressed property, let's say you get it under contract for 150 grand, day one of the contract. The contract states, on day 45, you will close on the contract, and they will get paid 150. However, if you have, let's say, a 14-day or 2-week contingency period, your risk is gone. Make sure the seller knows about it, but it's just a transparent contingency. I use those two words extremely intentionally. Transparent means the seller knows about it, and contingency means you have an out if you need it. This is like all real estate deals. If you're buying your personal house, there's going to be inspection. The bank's got to approve it. There's a lot of things that go into it. You have opportunities to legally back out of contracts, assuming everybody knows about it and you're up front, for multiple reasons, whether it be inspection, financial contingency, partner contingency, whatever it is. In those first 2 weeks, get that contingency in there. And what you do is you take that good buyer's list I talked about earlier, and you sell it. And a good real estate investor is going to gobble that deal up. You bought it at a good price for 175 grand. So on day 45, the seller gets paid 150. How much do you get paid? Anybody do the math? I can't do the math. Just kidding, I can. You get paid 25 grand for just kind of helping move things along. It's a win-win for everybody. This house that they got under contract for 150, you didn't like force the seller to sell it at that price. They agreed upon it. You did. It's a fair price. They're getting their money. It's what it's worth. You marked it up a little bit because you're, taking a need of buying a distressed house, because 99% of the population can't buy distressed houses because they don't have the means, the money, the funding, the resources, the capital, the brains to rehab. So it's a needed process. Everybody wins, and you can make money wholesaling. So the market shouldn't affect you at all if you do this the right way. As far as losing money, you just might not make as big of spreads. The second one is rentals. And I don't know if I'm going to have time to get into fix and flips, but basically, let me cover that really quickly. The fix and flips, the market's going to affect that. Just get in and out quickly. Do little rehabs. Don't do these huge rehabs that are going to take 6 months, because I think from November of 2022 till, let's say, March of 2023, that like winter, it's going to decline. A house is going to go down in value in St. Louis, or not St. House in, let's say, a decent market, nothing crazy. I mean, all markets are crazy right now. Just like a mid-level decent market, the houses are going to hold flat or decline. So if it's a 6-month rehab, your house that used to be worth 200 grand, maybe going to be worth 195. So that's not the end of the world, but that is, 5 grand of profit that you're missing out on. So get in and out quickly in case the market does shift more than I'm predicting. You're not going to get hurt if you're doing a $20,000 45-day rehab. I promise you, in 45 days, the market can't shift that much. It's like a big ship. It never has shifted that much. The worst situation I could ever think of would be it dropping like 1% a month, like ever. That was like 08, 1% a month total. So you're going to be fine. Just get in and out quickly on your rehabs. Make sure you know your numbers, be conservative, and get in and out quick. So that's how you fix and flip. And maybe you hire out the rehab, pay 10% to somebody to run it for you, but you get it done faster. So anyways, let's talk about rentals. So there's a 3-step process to buying rentals. The first step is understanding debt. The second step is the Faster Freedom Framework. The BRRRS method, all combined, a lot of numbers, letters, I'll explain them later. And then the last is to scale. Because I'm assuming y'all watching want to grow and become financially free. You don't want to do one deal, you want to do enough deals to be free. If you do, double tap that screen, like this on YouTube. I haven't been as consistent on YouTube going lives. We're going to start to do that. So like that for sure, what other platform you're watching on. So I'm assuming you want to create financial freedom and wealth, you're going to have to scale and not just do it one time. Likes, please. I feel like I'm providing a lot of really good free information on here, and the minimum I ask for is I'm giving away free training. I'm asking for likes. I'm not even asking for like money or badges or gifts or anything. So, all right, here we go. So let's walk through this process of how to buy rental property without using any of your own money. The first is to understand debt. So, did you know that there's good debt and there's bad debt? I did not know this until about 6 years ago, but there's good debt and there's bad debt. Debt, for this, the definition for my purposes is borrowing money. So you borrow money and owe somebody money. That's debt, right? So some examples of some bad debt. Throw some in the chat box if you haven't, but credit card debt, car debt, student loan debt. I don't think bad debt is a horrible thing. I have bad debt. I have a loan on my car. I have a few vehicles, and I got them, put a little bit of money down, but got 2.5% loans. That's free money. In fact, you're making money on your money with inflation. So I use money wisely, and borrowing money to buy a car 2.5% is wise in my opinion. I just know that bad debt and borrowing money for a car is not a wealth creator, okay? So it's okay to have bad debt. If you want to go to college and you need to go to college, be an engineer or be something that requires a degree, that's not bad debt. You got a job for it, and that's great, but it's not a wealth creator, okay? Same with credit card debts. I make a lot of money every single month on credit card points because it's a good way to got the money in the bank account in cash, but you use a credit card, pay it off twice a month, and your credit score goes up and you get points. So just know bad debt is not horrible. It's just not a way to create wealth. How do you create wealth? It's getting into good debt. That would be buying a single-family rental property or an apartment complex or a self-storage facility or a business. So if you're getting into debt to buy these things, that is a wealth creator. Why? What's the difference in good debt and bad debt as far as what you're purchasing or what you're borrowing money for? Any guesses? What's the difference between a business and a credit card? What's the difference between a single-family rental and a car? What's the difference? So here's what it is. Bad debt, your house, your personal house is the only one that kind of hugs both lines, but it's still bad debt. Bad debt goes down in value over time. So your car, I know inflation and prices and cars have been crazy, but 99 of the last 100 years, cars go down in value after you drive them off the lot. So cars go down in value. Credit card, there is no value. Student loans, there is no value. So they go down in value, and then they do not produce cash flow. So that's bad debt, but again, bad debt's okay. Decrease in value, no cash flow, bad debt. What's the opposite of bad? Good. What's the opposite of those? So good debt goes up in value over time. Your single family rental is going to go up. Your apartment, your business. If you manage them properly, they go up in value, and they do produce cash. All of those. So if they produce cash and go up in value, borrow as much money as you can to buy them. If they do not produce cash or go up in value, just be careful and know that you can pay them off and know that they're not wealth creators. So that's debt. Thumbs up. Did y'all know that? Does that make sense? Again, DM me on Instagram if you want my free training. No strings attached at all, y'all. All right. Double tap the screen, give a like on TikTok or on YouTube. Make sure you're following me TikTok, YouTube, Instagram, Twitter, Facebook. I give away a lot of free information, as you can tell. My content is a lot of free stuff as well. So I'm here to provide free information for you. I'm here to help you. I got businesses that do pretty well, and I don't have to be doing this, but I enjoy doing this. I enjoy building a brand. I enjoy helping people. And of course, some people are part of the mentorship and scale mastermind and things. You know, people do pay me, but I'm probably going to have 10,000 people on this live between all three platforms, or 10,000 views, between all three platforms that I'm on, and maybe one or two of them are going to do the mentorship. So I'm helping a lot of people that aren't paying me, and I'm fine with that. All right, the second part of it is the Faster Freedom Framework and the BRRRS method. So this is a method that's been out there. I'm actually going on, I don't know if Jaden even knew this, I'm actually going on BRRRRS next month to get recorded to talk about this scale. BRRRRS is the buy, rehab, rent, refinance, repeat. I changed it with the Faster Freedom Framework, the buy, rehab, rent, refinance, and scale. So I'm going on BRRRRS just to talk about how I took the R of repeat and made it scale. All right, so the Faster Freedom Framework, the BRRRRS method, is just that. It's the BRRRRS method. Now, who on here has heard of the BRRRRS method with an S? Every single live, more people have. Majority of people either have never heard of the BRRRR or BRRRRS method, or have heard of it with the R. About half or less have heard of it with the S, but every single live, there's more people that have. So have you heard of it with the S? Or have you not heard of it at all or not with the S? Thumbs up if you've heard of it, thumbs down if you have not. It stands for buy, rehab, rent, refinance, and scale. And this is the exact process I have used to buy rental properties without using any of my own money. I've bought 6 apartment complexes, 3 self-storage facilities, and I've sold a decent amount of my rentals and probably 160 rental properties, single families, with this method. So, like all real estate investing, it starts out with a distressed property that we need to turn into good debt. If you're paying attention earlier, this is how you do it. So, I get a property under contract. This is a real life but simple example. This was about 2 years ago, I got a rental property under contract for 100 grand. This works at bigger price points, so don't get your panties in a wad. It's okay, it works at $200,000-$300,000 price points in good markets as long as it cash flows. So, got a house under contract to purchase for 100, and then I looked at it and I saw it needed 50 grand worth of rehab, holding costs, everything, it needed 50 grand total of everything. So, I need $150,000 to buy and fix up this house. I went to my private lender, Steve. He looks just like that. He's got one leg shorter than the other. I'm kidding. I think his legs are probably the same size. That was just a bad drawing. So anyways, there you go. There you go, Steve. There you go. Got your big, thick legs now. All right, so I borrowed 150 grand from Steve, and I bought the house and fixed it up. I owe Steve money. Let me show you how I paid him back. But first thing to note, I took that sad house, and I made it happy. It went up in value. First part of good debt. Now, the next part is I got it rented. So now it produces cash. So it went up in value and is producing cash, so it's good debt now. I still owe Steve 150. I got a rented up, fixed up house. Now, here's the confusing step, or a little more confusing, the refinance step. Now that it's good debt, you take this to a small local bank, not your big banks, not your, U.S., Commerce, all those banks, Bank of America, your small local banks, and they will write you a check for up to 80% of the appraised value. Guess what? They wrote people checks for 80% appraised value in 2009, 10, 11, 12, 13, all the way up to today, and they will continue to do that even through the shifting market if you got the right relationships. So they wrote me a check. That's a horrible percentage sign. But anyways, they wrote me a check for 80% of the appraised value of this one. It appraised for 200 grand. So they literally handed me a cashier's check for 160. Actually, I lied. It was more like 159 because there were some closing costs in there. So they wrote me a check for a little less than 80% because the closing costs came out. Banks are pretty cheap in closing costs. So I took that $159,000 cashier's check and I paid Steve back. So now Steve's happy, but Steve made 9 grand in about 100 days and didn't even do anything at all to fix it up. He just met me for beers, got a check, met me for beers, picked up a check. So he's happy. He made 9 grand. He's paid off. Now, I do owe the bank 159 grand, but I owe them that in the form of a mortgage over the next 25 years, I think. This one is at like 4%. It's gone up since then, but at 4%. So that's a low monthly payment. So the rent covers the mortgage and all owning expenses to the tune of probably $200 to $400 a month positive cash flow. So everything's paid for, and I still make a few $100 a month cash flow. That on itself is nothing crazy, but over time, the power is created by doing that. Right now that property's worth 200. I would say in 10 years, let's say, or no, most of y'all are probably in their upper 20s, early 30s. So say 20 years. So by the time you're probably 50, that $200,000 property is probably going to be worth 350. And in 20 years, it's a 25-year note. It's going to be paid down to probably 25 grand. So in 20 years, that one property is going to get you $325,000 of equity plus $2 grand a month. $2 grand, let's say $300 a month times 12 months is $3,600. So 3,600 times 20 is, what is that, like 70, 75 grand? So you're going to make 400 grand over the next 20 years on this one property. Now imagine doing that times 10 properties. That's 4 million. Imagine doing that times 100 properties. That's 40 million. You get the power of it over time. Yes, it takes time and effort, but if you learn to do it and learn to scale, which I don't have time to talk about today, I got a call here in a couple minutes, but we're not done. Scaling is a way to scale. It stands for systems, coaching, action, lead flow, and then extra, not just one, extra funding. So if you work on this, over time, you will start to stack up multiple properties with minimal effort. The first property is going to be maximum effort for minimum results. As you scale and create systems and coaching and all this stuff, then it starts to become minimal effort for maximum gain. It's just the way the world works. If you hustle your ass off for the next 5 years, you can become financially free. Or you can work for someone else for 45 years and never be free, and then be free and retired when you're too old to enjoy it. So just kind of what's more important to you? Hustling for 5 years or coasting for 45. Whichever you want's fine. The world needs both, but just kind of depends on what you want. And if you are one of those people that want to hustle your butt off, then DM me on Instagram for that free training, or just follow me on all my social platforms and learn more, and eventually you get the training, or talk to me about the mentorship. Whatever you want. There's unlimited amounts of free resources out there, and there's a lot of really good paid resources too. So appreciate you watching. Going to go live on all these platforms every single Thursday at 12:30 Central. So thanks for watching. Thumbs up. Appreciate me. Follow me everywhere. DM me on Instagram for that free training, and we will see you next time.